be underpinned by sound and appropriate policy, rigor and institutional reforms that are aimed at improving the business environment, increasing the efficiency of public service delivery, and strengthening the accountability and transparency in public finance management. These reforms are outlined as follows. First, the procurement reforms. Mr. Speaker, on a continuous basis, the government reviews the procurement policies and procedures to ensure that we achieve efficiency and transparency and enhance good governance and promote savings in the procurement process. This is one critical area that government can achieve efficiency and unlock savings given the limited financial resources and fiscal space. With this in mind, Mr. Speaker, last year, the National Treasury committed to this House to roll out an end-to-end e-government procurement system, EGP, with a pilot phase commencing in July 2022 and a target date for full rollout to all ministries, departments, and agencies in January 2023. I wish to report to this House that the process is still in progress, albeit with some delays. The system will be rolled out by December 2023 to both national and county governments. Once rolled out, all government procurement and asset disposal procedures and processes will be managed online through the system. The system will enhance efficiency and transparency in the procurement functions. The system will also ease cost of doing business with the government and has the capabilities of monitoring and tracking all public procurement and asset disposals. Mr. Speaker, the government remains committed to facilitate access to government procurement opportunities and empower the MSMEs owned by women, youth, and persons with disabilities. This remains a key priority of government under the bottom-up economic transformation agenda. For this reason, the National Treasury has re-engineered the access of government procurement opportunities, AGPO, portal, to enable real-time registration and monitoring. The National Treasury has also directed all GPO that will enable businesses owned by the target group access liquidity promptly. Mr. Speaker, a large number of state corporations rely on the exchequer funding to service their payroll and other expenses. Over the years, bloated payrolls have remained a large burden to the exchequer, resulting in accumulated unserviced statutory obligations and also pensions liability running into billions of Kenya shillings. It has also been established that in most state corporations, a huge proportion of the staff complement comprises of support staff with a thin complement of technical staff. This gravely affects the core service delivery. To address this challenge, the State Corporations Advisory Committee, SCAC, will immediately embark on an aggressive program to rationalize staff establishment to keep them lean and strictly adhere to 70-30 ratio of technical staff to support staff. In addition, the National Treasury shall henceforth only approve budgets for hiring staff for only state corporations that have received approvals from the State Corporations Advisory Committee, the Public Service Commission, PSV, and Salary and Remuneration Committee together jointly. This requirement is in addition to confirmation of the requisite funding. Mr. Speaker, to support the restructuring of the state corporation, the Cabinet approved the Privatization Bill 2023. It seeks to repeal the Privatization Act of 2005 and streamline the privatization process and in order to restructure the state-owned enterprises. This was subsequently submitted to this House by the National Treasury in May 2023. The bill, once enacted, will enable the selected state-owned enterprises to achieve their full potential by entrenching commercial principles and reduce their reliance on the exchequer funding. I urge honorable members to support the government in this endeavor. Mr. Speaker, in financial year 2022-2023, the government initiated a number of reforms in Kenya Power and Lighting Company, KPLC, and Kenya Airways, KQ, aimed at improving their efficiencies, reducing costs, and increasing revenues. To further enhance KPLC's financial sustainability, the government will restructure the balance sheet, mainly focusing on the huge loan balances, payables, and receivables. This will in turn address the current huge liquidity gap at KPLC. Towards this end, the government will implement a 4-point action plan focusing on, first, transfer of all transmission asset/stroke lines to Kenya Electricity Transmission Company, KETRACO. Second, the government will settle outstanding rural electrification schemes, RES operations, and maintenance costs, which has a deficit of 19.4 billion as of June 2022, and ensure that KPLC and Rural Electrification and Renewable Energy Corporation enter into a commercial contract for the future rural electrification schemes maintenance costs. Third, the government will develop and implement a turnaround strategy that includes the reduction of system losses from the current 22.4% to 14.4% by end of June 2025. Fourth, the government will establish a new governance structure of KPLC to give private sector stakeholders fair representation reflecting the company's shareholding structure. With regard to Kenya Airways, the government's policy stance is to turn around the airline and position it as a Pan-African carrier that will ensure it is run with profitability and sustainability objectives, eventually reducing the airline's dependency on budgetary support. Let me turn now to pending bills for the national and county governments. Mr. Speaker, the total outstanding national government pending bills as of 31st March 2023 amounted to 537 Kenya shillings 537.2 billion, comprising of 450 billion for state corporations, semi-autonomous government agencies, and Kenya shillings 79.3 billion for ministries, departments, and agencies. During the same reporting period, the county governments reported pending bills of Kenya shillings 159.7 billion. The management of the pending bills is a challenge. In the public eye, will form an important benchmark, and in the public eye, it will form an important benchmark upon which the overall integrity of government style of financial management will be tested and judged. The delay in settling payments of pending bills has led to deterioration of financial positions of businesses, in particular micro and small medium enterprises, including business owned by women, youth, persons with disabilities. In view of the above, the National Treasury has prepared a cabinet memo requesting the cabinet to approve the establishment of a pending bills verification committee to carry out a thorough analysis of the stock of all pending bills and advice on how the bills will be settled. Once the outstanding pending bills are cleared by the verification committee, the National Treasury will direct all entities to ensure strict adherence to Public Finance Management Act of 2012 and clear pending bills as a first charge on the budget of the concerned entity in the subsequent financial years. Let me turn now to financial sector stability and development. Mr. Speaker, the banking sector remained stable and resilient in 2022. Deposits held by the sector increased by 12.3%, while pre-tax profits increased by 22.0%. On the other hand, gross non-performing loans for the sector stood at 13.3% in December 2022, a decline from 14.7% in June 2022. The need to build resilience and to exploit emerging opportunities has led to increased consolidation as well as regional expansion through acquisitions. This has led to strong institutions supporting the stability of the banking sector. The sector is therefore expected to remain sound and stable in 2023, building on the reform initiatives and buffers that have been built over the years. Mr. Speaker, in order to address consumer protection concerns arising from unregulated digital lenders, the Central Bank of Kenya introduced Digital Credit Providers Regulations 2022 that were approved in May 2022. They provide regulations and guidelines for the licensing and oversight of previously unregulated digital credit providers. I'm happy to report that by the end of March 2023, 32 digital credit providers have been licensed, while others are at different approval stages. More importantly, the Central Bank of Kenya is working with other agencies and regulators, including the Office of the Data Protection Commissioner, to ensure all digital credit providers are brought into the regulatory perimeter to protect consumers. Mr. Speaker, in an effort to transform Kenya's financial markets, the Central Bank will soon launch the upgraded Central Securities Depository Code named DAO CSD. The upgraded Central Securities Depository will improve financial market liquidity, enhance operational efficiency in domestic debt market, further promoting market deepening, and also broadening financial inclusion through expansion of digital access and position Kenya as the preferred financial hub in the region. The Central Securities Depository will also scale up services to the public sector, to the public market participants, and support our diaspora investors via a versatile and highly scalable digital solution with capacity to deliver seamless investor experience and convenience. Mr. Speaker, since the launch of the National Payments Strategy 2023-2025 in February 2022, the Central Bank has implemented major initiatives to improve quality, access, and affordability of payment services to Kenyans. This includes implementation of mobile money interoperability, licensing of new payment service providers, and rollout of key standards that increase convenience of payment services in line with global best practices. Building on these gains, in the financial year 2023-2024, the Central Bank, together with other stakeholders, will first undertake a comprehensive review of the National Payments System Act of 2011 and National Payments System Regulations of 2014 to modernize Kenya's payments legal and regulatory framework in line with emerging trends, innovations, and enhance oversight for improved service delivery to Kenyans. Second, it will develop and implement an interoperable payments platform to unlock cost-effective, real-time, and retail payments across banks, payment service providers, card schemes, and other regulated financial institutions. This will further contribute to lowering the cost of these services, increase choice, competition, stability, and widespread adoption of digital payments among Kenyans. Mr. Speaker, in order to reduce money laundering vulnerability, the Central Bank has reviewed and enhanced the banking sector Know Your Customer KYC and Customer Due Diligence CDD processes. This will further strengthen the effectiveness of the banking sector anti-money laundering and combating of financing of terrorism and the proliferation of financing, PF. risk-based supervisory framework. Indeed, AML CFT PF regime is important to uphold. Let me turn to deposit insurance reform. Mr. Speaker, financial stability risks have increased rapidly as the resilience of the global financial system has been tested by high inflation and rising interest rates. In order to enhance protection of the depositors, the Kenya Deposit Insurance Corporation is in the process of reviewing the current coverage limit of 500,000 with a view to ascertain its adequacy in protecting the micro, small, and medium enterprises. In addition, the corporation has developed an alternative dispute resolution mechanism and framework to address disputes between financial institutions that have been crossed and their respective stakeholders, thereby fast-tracking release of available resources and winding up those banks under liquidation. Let me turn to Capital Markets Authority, Mr. Speaker. The Capital Markets Authority, capital markets remain a critical catalyst in mobilizing of savings and investments towards productive enterprise in Kenya. In order to support micro and small medium enterprises, access to financing via capital markets, the Capital Markets Authority has developed the Capital Markets Public Offers Discount Regulations for 2023. These regulations will enable MSMEs raise debt and equity capital via Nairobi Securities Exchange. The authority is also implementing the Capital Markets Investment-Based Crowdfunding Regulations 2022, and that will support Kenyan startups to raise finance from both global and local investors. Mr. Speaker, as part of these initiatives to support the real estate sector, the LAP Trust, Imara Real Estate Investment Trust, late, has been listed in Nairobi Securities Exchange following the approval of the Capital Markets Authority. This will provide investors with a unique opportunity to invest in a diversified portfolio of income-generating real estate assets. Let me turn now to pension reforms. Mr. Speaker, pension coverage in Kenya currently stands at 22% of the working population, leaving majority of Kenyans without a pension cover. This underscores the need to extend pension coverage to the informal sector, which constitutes the majority of our workforce. To this end, Mr. Speaker, the government is working on a national pensions policy to address key concerns on coverage, portability of schemes, reciprocal arrangements to address concerns of Kenyans in the diaspora, and mitigate the fragmentation in the sector. In furtherance of the ideals at the bottom-up economic transformation agenda, the National Treasury has established an innovative scheme, the Kenya National Enterprise Savings Trust, KNEST, with a focus on the population in the informal segment of the economy. In order to promote uptake of the scheme, we will deliberately form strategic partnership to facilitate voluntary pension contributions for individuals in this sector and to continue to explore options to provide diverse pension solutions for self-employed individuals. Mr. Speaker, to effectively administer the public service pensions, the National Treasury will invest in modern technology and digital solutions to streamline pension processes and improve service delivery. In this regard, public service schemes will provide user-friendly online platforms that allow the pensioners to access their pension statements, make inquiries, and update their personal information conveniently. The government continues to implement public service superannuation schemes with the end goal of easing the burden of pension payments by the government. Let me turn to insurance reforms, Mr. Speaker. In the past 2 years, the insurance sector has grown by 3.36 billion shillings from a premium of 273 billion. The industry has also attracted investment from key multinational players. In order to further enhance the growth of the sector, the Insurance Regulatory Authority has rolled out a micro-insurance framework that will contribute to increase penetration coverage for the individuals with low incomes. The authority will strengthen private insurance's role in the universal health care coverage, promote crop and livestock insurance, as well as support insurance for MSMEs. Mr. Speaker, there are no deterrent measures under the Insurance Act to motivate accountability and observance of directors' duties, as well as senior managers' professional responsibilities. To address this shortcoming, I have submitted to this House Insurance Amendment Bill 2023 to provide for offenses relating to the management of an insurer. In addition, the bill will contain other amendments aimed at enhancing the efficiency of the Insurance Regulatory Authority in regulating the insurance industry. Let me turn to SACCO societies reforms, Mr. Speaker. The SACCO industry is characterized by many small and medium-sized SACCOs that find it difficult to effectively compete in the deposit-taking and credit markets. To address this challenge, the SACCO Societies Regulatory Authority, SASRA, is working on amendments to SACCO Societies Act 2008 that will provide the licensing and supervision of shared SACCO services platform. This initiative will improve the efficiency and competitiveness of SACCOs through establishment of cost-sharing digital platform to enable small SACCOs achieve economies of scale, while at the same time mainstreaming regulatory compliance in a cost-effective manner. Mr. Speaker, 12 years ago, the government introduced prudential regulation to secure financial stability of SACCOs and boost savings for members. However, there has been a lack of a resolution mechanism for financially distressed SACCOs. In addition to addressing these challenges, the SACCO Society Regulatory Authority has proposed amendments to the SACCO Societies Act 2008 to provide for a framework for appointment of trustees to the Deposit Guarantee Fund for SACCOs in Kenya, DGF. Let me turn to Unclaimed Financial Assets, Mr. Speaker. The Unclaimed Financial Assets Authority Act does not provide for claimers to designate a beneficiary of their assets or to a cause of their choice, and therefore any claim must be paid to the claimant. To address this, I have proposed to amend the Unclaimed Financial Assets Authority Act so as to empower claimants to designate beneficiaries of the unclaimed asset or to a cause of their choice. Let me turn to ease of doing business, Mr. Chairman, and consumer protection. Mr. Speaker. Mr. Speaker, in order to ease the cost of doing business and minimize compliance costs for micro, small, and medium enterprises, the Competition Authority of Kenya will exempt MSE, medium and small enterprise sector from merger notifications, thus enabling startups, digital businesses, among others. Further, the authority will monitor and conduct surveillance audits specifically in the manufacturing and agro-processing sector so as to protect MSMEs from incidences and abuse of buyer power. Second, implement codes of practice. The Competition Authority will implement codes of practice to ensure that MSMEs in the retail and insurance sectors are protected from powerful buyers. The Competition Authority will screen and investigate infractions such as suspected cartels or abuse of dominance conduct, such as excessive pricing, price discrimination, predatory pricing, margin squeeze, to ensure a level playing field. And the Competition Authority will actualize and initiate area actualize the initiative ARIA started with the National Assembly to address the issue of price fixing by professional services to make the fees competitive and improve the quality of services. On consumer protection, the authority will monitor and investigate emerging consumer issues on the utility sector, pharmaceuticals, digital financial services, e-commerce, insurance, aviation, and safety of basic commodities. In addition, the authority will seek redress through replacement or refunds to customers affected by dark commercial patterns, scams, fraud under the digital economy. Let me turn now to the fiscal framework. Mr. Speaker, the government fiscal policy for the financial year 2023-2024 and the medium-term budget aims at undertaking a growth-friendly fiscal consolidation plan to ensure debt sustainability. This will be achieved through improved revenue collection, primarily through broadening of the tax base and containing overall expenditure to target set, while prioritizing higher impact social and investment expenditure. Mr. Speaker, the fiscal policy targets to grow total revenues to 17.9% of GDP in financial year 2023-2024 and above 18.3% of GDP over the medium term. As part of the economic turnaround plan, the government will scale up revenue correction efforts by the Kenya Revenue Authority, KRA, to a target of Kenya shillings 4.0 trillion over the medium term. In order to achieve this, the government is undertaking a combination of both tax administrative measures and tax policy reforms. Mr. Speaker, regarding tax policy, the government will implement the national tax policy and finalize the medium-term revenue strategy for the period financial year 2023-2024 to 2026-2027. The national tax policy, which is before this House, will enhance the administrative efficiency of the tax system, provide consistency and certainty in tax registration and management of tax expenditures. The medium-term revenue strategy comprises rigorous administrative and policy measures to reform the tax system, which is expected to boost tax revenue over the medium term. On tax administration, Mr. Speaker, the Kenya Revenue Authority is implementing reforms to move towards seamless taxation by ensuring that its systems, taxpayers, and businesses are integrated to allow for the automatic movement of data through machine-to-machine based processes, and where appropriate, shift to real-time processing. This will enable KRA to monitor business transactions in real time, therefore sealing revenue leakages through tax avoidance and evasion. On the expenditure reforms, Mr. Speaker, the government will sustain efforts to improve efficiency in public spending and ensure value for money by eliminating non-priority expenditures, retiring expenditure and unsustainable consumption subsidies, reducing tax exemption, scaling up use of public-private partnership financing for commercially viable projects, and rolling out end-to-end procurement system. Mr. Speaker, to address the challenges of perennial low absorption of development partners' funds that have denied Kenyans the full benefit of this financing, the government will put in place policies and administrative measures to minimize payments of unnecessary fees and charges. Let me turn to revenue projections, Mr. Speaker. Mr. Speaker, supported by the tax policy reforms and administrative measures highlighted above, we project total revenue corrections, including appropriations in aid and grants for the financial year 2023-2024 budget, to be Kenya shillings 2.96 trillion. and that is equivalent to 18.2% of gross domestic product, GDP. Of this, ordinary revenue is projected at Kenya shillings 2.57 trillion, equivalent to 15.8% of GDP. Ministerial appropriations in aid is projected at Kenya shillings 348.7 billion, and grants are projected at Kenya shillings 42.2 billion. Expenditure projections, Mr. Speaker. Total expenditure projections in financial year 2023-2024 budget is projected at 3.7 trillion, equivalent to 22.6% of GDP. Of these, recurrent expenditures will amount to Kenya shillings 2.53 trillion, equivalent to 15.6% of GDP. Development expenditures, including allocation to domestic and foreign financed projects, contingency fund, equalization fund, and conditional capital transfers to county government is Kenya shillings 743 billion, equivalent to 4.7% of GDP. Equitable share to county governments is projected at that 385.4 billion shillings. Mr. Speaker, I now turn to fiscal balance. Mr. Speaker, given the projected revenue and grants against the projected expenditures, the fiscal gap or fiscal deficit is projected to decline from Kenya shillings 718.0 billion, equivalent to 4.4% of GDP in financial year 2023-2024, from a projected Kenya shillings 840.9 billion, equivalent to 5.8% of GDP in financial year 2022-2023. The fiscal deficit will be financed through net external financing of a Kenya shillings 131.5 billion, equivalent to 0.8% of GDP, and net domestic financing of 586.5 billion, and that is equivalent to 3.6% of GDP. Mr. Speaker, our medium-term fiscal consolidation policy targets to progressively reduce the level of fiscal deficit from the expected 5.8% of GDP in financial year 2022-2023 to 3.6% of GDP in the financial year 2026 to 2027. Let me turn to public debt management, Mr. Speaker. Kenya's public debt remains sustainable, but with elevated risks of debt distress due to persistent global shocks that adversely affect the liquidity ratios. The depreciation of the Kenya shilling against major currencies and the rise of interest rates have elevated cost of debt service. Further, the depreciation of the currency has increased the size of the public debt stock, as half of the public debt is actually denominated in foreign currency. Although the debt burden has risen, Kenya has not accumulated debt service arrears, and the government is committed to honor all public debt obligations as they fall due. Over the medium term, revenue-driven fiscal consolidation policy stance is expected to improve further the country's debt sustainability ratios and debt carrying capacity. Mr. Speaker, the current limit of the debt as approved in 2020 by this House is Kenya shillings 10 trillion. Guided by the best practice, the government intends to change the public debt ceiling from a numerical number to a debt anchor in the form of a ratio of public debt to GDP in present value terms. The proposed change to the debt ceiling provides an appropriate guide for optimal level of public debt based on the country's ability to pay. This is the debt carrying capacity that can objectively be assessed, as well as provide directions on information on debt accumulation or reduction from time to time. In order to anchor debt ceiling in a statute, the National Treasury developed a Public Finance Management Amendment Bill 2023, which has been submitted to this august House for enactment. The bill was subjected to public participation in line with the requirements of the Constitution of Kenya on transparency and accountability in public policy formulation. I urge the honorable members to prioritize and consider this bill favorably. Mr. Speaker, the external debt service is projected to increase to Kenya shillings 475.6 billion in financial year 2023-2024 from Kenya shillings 242.1 billion in the financial year 2023-2023 for financial year 2022-2023, mainly reflecting redemption of the US dollar 2.0 billion Eurobond, which is approximately 241.8 billion with the current exchange rate. In preparation for the redemption of this maturing bond, the National Treasury and the Economic Planning issued an expression of interest to bring on board a lead manager to advise the government on liability management options towards the resolution of the Eurobond 2024. Mr. Speaker, I wish to assure Kenyans and investors that our fiscal positions remain strong and the government remains committed to meet all maturing obligations as and when they fall due, including the maturing Eurobond for June 2024. Mr. Speaker, due to the limited fiscal space, the government has strengthened the public-private partnership, PPP framework, to leverage on private sector expertise to deliver projects that have strong economic, commercial, and environmental benefits that are also aligned to our national priorities with sustainability and climate change as key considerations and drivers. To ensure the sustainability of PPP projects, the Projects Facilitation Fund, PFF, has been operationalized. The fund will support project preparation, provide viability gap funding to projects, as well as a source of liquidity to meet fiscal commitments and contingent liabilities that may arise from PPP projects. Mr. Speaker, with the fund in place and the robust legal and regulatory regime, the private sector has the necessary confidence and security to invest in PPP projects. Indeed, in the last financial year, the National Treasury successfully mobilized Kenya shillings 15 billion by achieving financial closure of 2 clusters of urban roads projects under the Roads Annuity Program. The projects are currently in the construction phase. Additional projects that have closed include 2 renewable energy projects with a combined installed capacity of 70 megawatts. Further, to contribute towards government's agenda on bulk water supply and food security, several high-impact projects have been appraised and approved to proceed to the project development phase under the PPP model. These projects will provide production of additional 51,000 hectares to further strengthen the food security agenda, which is a high priority for the Kenya Kwanza administration. The bulk of water will increase potable water. The bulk water will increase potable water supply by an estimated 200,000 cubic meters per day. The National Treasury and the Ministry of Water and Sanitation have developed a water purchase agreement which will pave way for the private sector to develop projects in a sustainable way. The National Treasury is in the process of developing a 10-year infrastructure plan that will be cross-cutting across various ministries to support delivery and prioritization of projects. Mr. Speaker, to build on this, the National Treasury plans to mobilize an estimated Kenya sharing 100 billion in private sector capital through various priority sectors. The focus will be on priority investment and underlying key projects and programs in each sector that deliver nationally significant infrastructure drive growth and also unlock private sector investment with greatest potential benefits to Kenyans. These sectors will include airports, seaports, blue economy, water, agriculture, industrialization, that is special economic zones, energy, including transmission lines, and digitalization, among other key sectors in the economy. Inclusion of local goods, works, and services will be emphasized for each project to contribute to overall economic growth by encouraging